Good morning and welcome to Stock Market Today. It's Thursday, January 2nd, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today, brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. A lot of the content for this show comes out of that email. We also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So I hope everybody had a great New Year's holiday. Let's think things going on the first trading day of the new year and the new decade. U.S. equities were higher in quiet Tuesday's trading as stocks reversed early losses to close the year on a bullish note. All sectors were higher on the day, led by materials, energy, and technology. Treasuries were weaker, with the curve steepening. The dollar was weaker on the major crosses. Gold was up 30 basis points. WTI crude finished down about 1% on the day. And as we get to the desk this morning to start us in the new year, futures are up about 60 basis points. Asian markets were higher overnight, with China outperforming. Markets in Europe are trading higher this morning as well. Treasuries are a little changed. The dollar is stronger against the euro and the yen, though the dollar index does remain near a 6-month low. Gold is up 10 basis points, and WTI crude is up about 10 basis points. And let's look at the structure of the S&P 500 here, still holding above that near-term support zone that we've been highlighting in the 3150 to 3200 area after reversing earlier losses to close the year on a bullish note. We're highlighting resistance or potential resistance up near the recent highs at 3250. The RSI closed the day back above the 70 mark, so back in overbought territory for that index. But for us, what we're looking at is the fact that the RSI is remaining in bullish ranges, confirming the strong price trend that we saw since breaking out of the July through October consolidation and moving the market higher into the end of the year. Chaikin money flow is bullish and actually ticked higher on the day following the close near the high of the day on Tuesday. So indicators supportive of the trend that we're seeing as we enter the new year. Really, the focus remains the same. Key in on the leading areas of the market. Look for the stocks within those areas of the market that have bullish or very bullish ratings that are outperforming the market with bullish money flow for your ideas. And ideally, we want to see those stocks when they're set up, i.e. they are oversold based on a shorter term overbought, oversold indicator. Turning now to our market in a minute. What are we writing about today on the first trading day of the new year? Well, close the year on a positive day, reversing early losses. We hit that already. Mid caps, weighted by revenue, are leading the broader market. It's an interesting ETF that I took a look at, and we will look at further a little bit later in the show. Breadth metrics in the U.S. do remain constructive, while global equities continue to improve. We'll take a look at those two data points later in the show as well. And as we said, futures do point to a higher open here today. Looking at the major indices from a power bar perspective, the Dow added 20 basis points on Tuesday, 6 bulls to 4 bears there. S&P 500 adds 25 basis points to close the year, 115 to 63 bulls to bears. NASDAQ, slight, and we say slight underperformer, 24 to 11 bulls to bears for the NASDAQ, which has really been market leadership throughout the majority of 2019. Small caps, up 20 basis points, 742 to 236, the bulls to bears there. Bonds down tick in price on the day, sending yields higher. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes away from here, though, are mixed. Let's hit our stock of the day now. Stock of the day, remember, is auto-generated based on our power gauge rating, and I analyze it for you in real time here. Today's stock is Genesco, ticker GCO. Specialty retail name. And remember, we touched on retail earlier in the week by Mark Chaikin actually highlighted it in his note over the weekend. Retail turning bullish here at Chaikin Analytics. Genesco closes at 47.92, down about 90 basis points. But that power gauge rating is very bullish due to very attractive financial metrics, very strong price volume activity, as well as very positive expert activity. 20 factors, 5 in each of these 4 categories, give us that very bullish rating for a stock that has a strong trend as it trades above the rising long-term trend line and is in a strong industry group. Specialty retail has been fairly positive of late. Reading the chart from the bottom up, this ribbon here tells us where the rating is and has been over the past 12 months. And we can see green is a bullish or very bullish rating. And that's met with a stock that is now outperforming relative to the SPY. Now, this stock spent the majority of 2019 as an underperformer. However, a solid earnings report caused a gap higher, which is now consolidating, leading to market leadership. Chaikin money flow turns bullish, and the stock is now oversold. Here's that overbought, oversold indicator. So this is what we're talking about when we say we want to look for leading stocks and leading areas of the market. Genesco, GCO, is an example of that. Bullish or very bullish stock outperforming the market with bullish money flow becomes oversold here in the near term. That sets up a potential opportunity for investors who are looking for new ideas as the new year gets underway. You might want to consider a name like Genesco, GCO, part of the specialty retail industry group that's been strong of late. Take a look at GCO here today. Let's look at our industry tracker now, or sector tracker rather, tracking the movement of the major sectors over the last 5 days. And just kind of interesting that with the market trading up near all-time highs, with rates continuing to move higher, the top two groups over the last 5 days are those bond proxies, real estate and utilities. To me, these appear to be counter-trend rallies within the context of emerging downtrends, both on at least on a relative basis, but REITs and utilities at the top of the list over the past 5 trading days. There's discretionary, right, and specialty retail that we just touched on with Genesco as part of the discretionary group. So discretionary rounds out the top 3. In the middle of the pack, but still higher over the past 5 days, materials, tech, financials, and staples. Technology, obviously a key area of focus for us. Leading sector throughout 2019 with the weight of the evidence pointing to the potential for that leadership to continue. Financials, another area of the market that we've liked, especially as rates appear to have bottomed and are beginning to move higher. One of the under the hood, however, within the financials, there's been a shift throughout a lot of 2019. It was insurance stocks that were leading the financials. Now the insurance names have rolled over on a relative basis, but the banks and the capital market stocks have kind of picked up the baton and started to run with it. Staples up 11 basis points over the past 5 days. The groups that are lower over the past 5 days: comm services, industrials, healthcare, and energy. And energy, just we've been watching it. We've been watching for a potential shift in the dynamics within the energy complex. It's just not there yet. XLE has a bearish Chaikin power gauge ETF rating, and healthcare possibly an opportunity here on a relative basis. Healthcare is another one of those groups that we've liked. It's recently emerged as market leadership, a little bit of a counter trend move to the downside here in the near term, potentially presenting opportunities. I think you want to drill down on the healthcare sector and look for names that could move higher here to get the year going. Now, our industry in focus is bank services, right? Speaking of within the financials, which over the past 6 months has outperformed the S&P 500 by about 50 basis points. Its power bar ratio, which measures future potential, however, is very strong. 55 bullish or very bullish stocks within this group for only 2 bearish or very bearish stocks. It's currently ranked number 22 of 21 subsectors that we look at, and that is based on this ratio. And some of the indicative stocks there that you may want to look at for opportunity should the setup be in place: Simmons First Nation, SFNC with a very bullish Chaikin power gauge rating, Umpqua Holdings, UMPQ, also with a very bullish power gauge rating, and Hancock Whitney Corp, HWC, with a very bullish Chaikin power gauge rating. And if we look at the group, here's KBE, the ETF that tracks the bank industry group. You can see upper left-hand corner, the ETF power gauge rating for KBE is very bullish. The fund is a strong trend above this rising long-term trend line. Right? Notice that there was a big consolidation throughout the majority of 2019. We've finally broken topside through resistance at the $46 area where we remain. I think as long as this fund is holding above $46, it makes sense to take a look at it. Very bullish fund, outperforming the market, oversold. Money flow taking a little bit of a dip here, but it's been persistently positive since the October-November timeframe. Banks are an area of the market that we continue to have in focus, especially if rates continue to move higher. Let's talk about what's trending now. Tuesday's movers and shakers. And again, not a lot of company-specific news. We're in a bit of a news vacuum during a holiday week. Mylan up 3.5%. With a very bullish rating. DD, no real news there, up 3%. Mosaic, same thing, 2.9%. nothing company specific. DXC was a big decliner throughout 2019, so maybe some of the tax loss selling in that name has abated. That stock moves higher by 2.75%, and the same can be said for Macerich, part of the real estate group. Big decliner 2019, seeing a little bit of a rebound in the closing day of the year. On the loser side of the board, remember on Tuesday we looked at aerospace and defense and said how the relative trend there seemed to be shifting and was now bearish. Well, look at the top two losers, NOC and LHX, both coming from that group. Anthem, no real news, down 1%. Hog, it's Harley Davidson, down nearly 1%, and URI down nearly 1%. But those bottom three there, nothing company specific that I can see driving trading in those names on Tuesday. So let's look at the charts now. It's Thursday. We look at market breadth to get a gauge on the health of the trend for the market. And what we can say, as we've been saying for the past few weeks, is that breadth remains constructive, right? And it's across time frames, right? Looking at the percentage of stocks above their 200-day moving average for the S&P 500, up here around 80%. So when above 60, that's a sign that a healthy majority of stocks are in long-term uptrends, and that does remain the case today. We have a breakout through this resistance area, confirming the price strength that we've seen in the market. What if we back it up a little bit? What if we bring it into a more intermediate term time frame? Well, the percentage of stocks above their 50-day moving averages is also up here near 80% and has broken through this slight downtrend line. So long-term and intermediate term breadth confirming the trend that we're seeing here in the market. Not shown on this chart is a much shorter term time frame that I highlight in my note for Chaikin Analytics members, and that's the percentage of stocks above their 20-day moving average, and that as well is close to 80%. So across time frames, a healthy majority of stocks are either in long-term, intermediate term, or short-term uptrends by looking at where the percentage of names above their respective moving averages. Adding to that, at the bottom of this chart here, we can see that the advanced decline line continues to track the market, indicating a healthy level of participation or a healthy number of stocks acting in concert with the broader market, and that does remain the case with this advanced decline line making new highs with the market. So breadth does remain constructive. That's here in the U.S. What about globally? Well, taking a look at the iShares MSCI ACWI ex-US ETF, what you can see is that, after being in a consolidation and a downtrend for much of a 2-year period, global stocks have broken through resistance after holding support at the 200-day moving average, which is now rising. So it's not just the U.S. For a long time, a lot of 2018 and a lot of 2019, U.S. stocks were leading and global stocks were under pressure. That is a dynamic that appears to be changing here as we have broken through resistance and are now holding that resistance level. And the price strength is being confirmed by momentum, a series of higher lows for the RSI as this indicator shifts into bullish range, is actually becoming overbought with the most recent move higher. So absolute price strength confirmed by momentum. And on a relative basis, we're starting to see some early signs of global stocks potentially carving out a bottom. At the bottom of this chart here, we're looking at ACWX relative to the S&P 500. And you can see, right, we're holding support, not really moving higher in a meaningful way yet, more of an inline performer, but we are holding support. At the very least, the relative downtrend appears to have halted. So that's an encouraging sign for investors who are looking to invest globally. And I mentioned mid-caps weighted by revenue, kind of an interesting fund here, mid-cap revenue ETF. Instead of looking at their market caps, we're looking at their revenues to weight the stocks, breaking out to new highs, confirmed by momentum and breaking this downtrend relative to the S&P 500. So kind of an interesting way to look at the market. Bullish ETF rating, 118 bulls to 51 bears. That's going to wrap us up for today. Have a great Thursday, everyone.